In short sale fraud news, we're seeing two scenarios. In one, the new borrower never occupies the property and quit-claims the property back to the seller. The seller stays in his house but pays a much lower monthly payment. This scenario often includes a straw borrower. In scenario number two, the borrower never occupies the property and rents the property back to the seller. Welcome to Fraud Bites from Interthinx. In one of the latest mortgage fraud trends we've seen, some realtors and investors are creating title companies to do short sale closing transactions for themselves and others. Having the professional participants involved in the closing process allows same-day flips with false HUD closing statements issued to the servicer. The areas affected are Southern California and Denver, Colorado. Servicers should be looking for non-arm's length associations between participants and any company performing services. Interthinx has released its 2010 annual mortgage fraud risk report. According to the report, overall mortgage fraud risk is greatest in areas with high levels of foreclosure activity. Criminals may be migrating to those areas, and frauds for property must be identified and addressed going forward with the same urgency as frauds for profit. To download the latest Interthinx Mortgage Fraud Risk Report, simply visit interthinx.com. Equifax and Interthinx have joined forces to address investor and lending requirements and uncover undisclosed debt. Undisclosed debt monitoring, developed by Equifax, is now available through FraudGuard and alerts lenders of borrower activity that may represent risk. Financial institutions can quickly identify potential borrower misrepresentation or undisclosed debt early in the loan origination process. Track credit inquiries, trade lines, and secondary reissues. Streamline the underwriting process, resulting in significant time and cost savings for the lender and fewer last-minute document requests for the borrower. Easily customize a compliance program to fit within existing production workflow and address specific credit policy and guideline procedures. Leverage a single, user-friendly report that includes undisclosed debt monitoring analysis. For more information about the integration, contact an Interthinx representative and schedule a presentation. In a moment, we'll be back with an interview with industry veteran and fraud expert Connie Wilson. Please stay with us.
Property valuation remains a constant factor in mortgage fraud. And analytical studies like the Interthinx Mortgage Fraud Risk Report indicate that fraud for property is most likely on the rise as discrepancies in documentation become apparent. And as archaic approaches to modern problems continue to fail, Interthinx took the cue by applying its proficiency in fraud analytics to modernize and strengthen the way appraisals are analyzed. Today's appraisers can provide a comprehensive depiction of the value and marketability of property by leaving the three comps in the truth scenario behind and embracing a global examination of the market, says Mark Chapin, Chief Valuation Officer at Interthinx. Interthinx Review Appraisal Services is a powerful blend of human-driven due diligence and web-based automation for the valuation services sector. Interthinx Review Appraisal Services is part of Interthinx, the same Interthinx renowned for high-level comprehensive mortgage risk mitigation solutions and industry experts. Through the leadership of Interthinx and the technical prowess of a nationally recognized workflow solution, certified appraisers, following a thorough background check, provide knowledgeable, timely, and professional desk and field reviews. This valuable combination offers lenders the opportunity to significantly reduce collateral risk. Call Interthinx today for more information or to schedule a demo.
Connie, over the past few years, Interthinx Asset Services has been manually reviewing over 10,000 loan files per month. Now, given the significant changes in the marketplace during that time, what have you learned that will be instructive for our customer groups going into this next cycle?
Christy, as I have said many, many times, there are no new frauds, only new ways of committing them. The fraudsters are highly intelligent, and they embrace technology. Lenders must be just as ready to embrace technology to fight the fraud. It's sort of like, let's fight fire with fire.
Connie, where do you see lenders needing more support in the coming year? And why do you believe it's critical for lenders to outsource to subject matter experts?
Well, Christy, as I said earlier, there are no new frauds, but there are some old frauds that are going to start rearing their ugly head, especially with the new guideline changes. And with the more emphasis placed on due diligence and quality loans, the lenders are going to have experts help guide them through this next year with additional training and resources.
And what coping mechanisms exist to help lenders navigate through this expanding scope of repurchase risk?
Chrissy, we have to ask ourselves what causes repurchase risk. And the cause of repurchase risk is low quality loans. Again, what I said earlier, using technology to identify patterns, adequate training by experts, these are the things that are going to prevent repurchases, and therefore the risk is going to be diminished.
Thanks so much, Connie.
Thank you for having me, Christy.
To learn more about Interthinx Asset Services, simply email sales@interthinx.com. And that's it for today. Check back for our next Fraud Bites update, where you'll hear the latest in industry and Interthinx news. Hands off my script. Who writes this? Oh, it's me.